Hi, Florence. Thank you for joining our program today. Well, can you tell our audience what is the difference of Islamic bond and conventional bond products?
Yeah, I think one of the important principles of Islamic finance is under the Islamic rules, the charging of interest is prohibited. And as we all well know, in a conventional financial product, interest is a very common element. So there are various ways under the different Islamic finance model or products where the charging of interest or the payment of interest is replaced by other forms such as the charging of rental income or the sharing of trading profits.
And how does this special structure of Islamic bond will need to have the tax issue?
Okay, because in Hong Kong, although our tax law is relatively simple, we do have a specific tax treatment for income or deduction for expenses in relation to interest, rental, as well as trading profits or losses, let alone the claiming of tax depreciation on plant and machinery. So in a conventional financial transaction, because the legal document would clearly spell out what the nature of the income or payment is, therefore the tax treatment would be quite clear. However, in a Islamic finance transaction, at this stage, the Hong Kong tax law is not adapted to accommodate Islamic financial products. So if one just follow the legal description of the payment or income per the documents, so what is interest in a conventional financial transaction may be, for example, described as rental in the Islamic financial transaction, and so the tax treatment would not be the same. So I think the controversy currently is many people have the misconception that Islamic finance would want to have more tax exemption or more tax beneficial treatment. In fact, the reality is we are actually asking for a level playing field so that the Islamic finance product would get the same tax treatment as conventional financial products.
Actually, we have a lot of competitors, Malaysia or some other country are also developing their Islamic finance. So can Hong Kong compete with this center to develop ourselves as an Islamic finance center?
And I would think that Hong Kong should have a good foundation or good basis to do so, because in Hong Kong we actually have one asset class which is particularly familiar to as well as welcomed by the Islamic investors, which are real estates. Income derived from real estate to a large extent would be acceptable for Islamic financial products. So this is a good area. And the other advantage Hong Kong has is a special administration region of China, and it's got a very favorable avoidance of double tax arrangement with China. So Hong Kong should be able to provide, well, to serve as a good platform for Islamic monies to flow into China and vice versa.
Thank you very much for joining our program today.
Thank you, Ina. It's my pleasure.